Hi, good afternoon. Are you thinking of how you're going to pay for that senior living and assisted living facility? That's our topic today on Lantern Rays TV. Welcome to Lantern Rays TV, where we deliver unbiased, unopinionated, fact-based, purposeful information when you need them. My name is Joanna, and I am the Admissions and Marketing Director for the Lantern of Saybrook. So this is a big topic today. We're just going to get talk just in general terms. Of course, always talk with your financial advisor, who will give you always the best advice. But today, there are more than 800,000 Americans living in an assisted living facility with an average monthly stay of $4,000 a month. That is a breathtaking $48,000 a year. Add in another $1,200, $1,500, $1,800 for memory care, and those dollars add up fast. So, how do most families pay for assisted living? Well, with private funds, a combination of savings, Social Security, pension, retirement funds. However, there are some other ways to pay for that care, and that's what we're going to talk about today. Let's first talk about what does not pay for assisted living, and that is Medicare. Unfortunately, Medicare does not pay for assisted living, and it only pays for 100 days in a skilled nursing facility for each benefit period. Financial assistance from Medicaid for assisted living usually comes in the form of a Medicaid waiver, but you must meet financial criteria, and most assisted living facilities only allow a small percent to be Medicaid, and is usually reserved for the clients already in assisted living for use when their funds run out. So there is a program for veterans. It's called Aid and Attendance Benefit. This program can provide assistance to our veterans to help pay for their living costs. For instance, a surviving spouse of a veteran can receive $1,228. For a single veteran, it is $1,911 a month. For a married veteran, we're talking about $2,266. And if you both are married and both veterans, you could receive $3,032 per month. Now, you will need to gather the proper paperwork, including your discharge papers. Eligibility is complicated, and wait times for approval can be extensive. Contact your Veterans Administrative for full details on that. Now, Social Security and assisted living. Well, Social Security does not pay for assisted living, but it does help build that bridge to help offset the cost of assisted living. Benefits for Social Security can change. For example, if a spouse dies, you may receive a portion of your spouse's Social Security. Call your Social Security Administration in your area to check eligibility for your benefits. Let's talk about reverse mortgages and home equity lines of credit. These are two options to help you pay for assisted living. However, these options are not available to all homeowners, nor are they necessarily appropriate for every family. And it may not make a sound economic decision. In this area, you are going to need advice from a professional in financial planning. For instance, if you want to use a reverse mortgage, the individual must be married and their spouse must continue to live in the home as the reverse mortgage states. That home must be owner occupied. A home equity line of credit, they don't have those kind of limitations, so it may be a good option for your family. Now we're going to talk about life insurance benefits and conversions. Okay, there are 5 different ways life insurance policies can be used for care while the policy holder is still alive. So this is a really good thing to know. However, not all options are available to all policy owners, nor do they necessarily make economic sense. But life insurance is one of the most underutilized self-payment options for assisted living. So it's something to check into. The first one we're going to talk about is life settlements. These are an option in which a policyholder sells their right to collect the death benefit and receives a lump sum of cash. Another one is a settlement, it's similar to life settlements, but are designed for terminally ill individuals. Now, when it comes to seniors, if your senior is on hospice, that is considered a terminally ill. However, there are lots of hospice individuals that last 2, 3, 4 years and on. So that's something to keep in mind. There's also a accelerated death benefit. This is an option that enables a terminally ill individual to receive a portion of their death benefits in advance of their death. Another one is a death benefit loan. These are loans that are taken against the cash value of the policy. Now, life insurance conversions directly convert the value of the policy in exchange for care. So if it's a $100,000 policy, it's worth $100,000 worth of care. Of the 5 options that I just talked about, the one with the greatest value is the life insurance conversion. So that's something to think about. Contact your life insurer to see which, if any of these options are going to be best for you. So now we're going to talk about assisted living loans. Now, these loans are designed for short-term gaps, typically periods of less than 2 years. They're really good for things like waiting for that money to come in from the sale of a home, waiting for your veteran benefits to start. Of course, again, talk with your financial advisor to see if this is an option for you. We're going to talk about long-term insurance. Only about 5% of seniors have long-term insurance. So talk with your financial advisor to see if that's a good option for you. Also, it's important for families to develop a financial plan when deciding how you're going to pay for assisted living. Do your homework and talk with the professionals. Thank you for inviting me into your world. I hope the information was helpful. Let me know if you would like to learn about a specific topic or subject. Shoot me an email. My email is info@lanternraystv.com. And happy, healthy aging, and we will see you soon. Bye-bye, everybody.